All right, good morning, everyone. It is 8:43 on the morning of October 18th, 2022, and this is my pre-market strategy session. So today, the title of the video is "Cues Above the Neckline," and basically what we have here. Let me make this one right here disappear. Is we have the neckline. This is the downtrend on the cues, and this will be in play for the foreseeable future. If you can hear that meowing in the background, that's my cat Gus, who is most likely hungry. Okay, Gus. All right. I'll get to you soon, okay? I promise. All right? Okay. All right. So, yeah, and this morning here you can see this pre-market yellow line right here. It might be really faint if you're looking at it on a phone. This line is above the neckline. Here we are. We came down below the neckline here for a little while, popped up above it, crashed back down below it, worked our way back up above it again. And so, roughly speaking, this line will be the trajectory of the trend for the foreseeable future. And when I mean foreseeable future, anything past 6 months gets a little foggy on the market. But as of right now, economically speaking, things look like they're going to be pretty difficult for somewhere around the next 12 months. So, uh, the next line that I have is sort of the top line. Let's see, let's get that. There it is right there. And this is sort of the top end resistance of this downward channel that we're in right now. I imagine at some point there's going to be capitulation, which is going to make this sort of crashing move below the neckline. I don't think it's going to happen yet. Earnings season apparently is doing okay. And actually, there's one stock that I bought for my sons here, RBLX. I bought this for my son's portfolio, and apparently it had a really good earnings report here. I bought it. I don't remember where I bought it. It's somewhere in this area, in this price region in here. I've forgotten where exactly the price is that I bought it. So, I'm definitely a cheerleader for it. That's not investment advice by any means. But if you're familiar with the Roblox platform, it's popular with the kids. And I actually play a couple of the games on there on a regular basis just to pass some time. From time to time, I'll play it just to do something to kill some time. Like I was on jury duty recently. I didn't get selected, thank goodness. But there's stuff on there to pass the time. It's kind of nice. All right. Anyway, so looks like we're going to get a little bit of a relief rally here, at least. How high it goes, I don't know. And where it turns around, I'd be surprised to see it make it all the way back to the top of this line again. But, the market can remain irrational longer than I can remain solvent. So, yeah, for the time being, I'm just sitting tight, really waiting for the next big move up that predicates the next big move down. Really, that's kind of about it. The VIX is still elevated. It's above 30. Once it starts breaking down below 30, it'll go back into definitely not into an investable range. However, it'll be bullish if the VIX can break down below and hold below 30 for a little bit. It ought to start to creep back into the mid 20s or so and set us up for the next leg down. The 10-2 yield is still inverted. It's a rather deep inversion. Personally, I think it's going to test this negative 699 level at least, if not go below it. In times when the yield curve inverts more, like back here between, what is that, the 7th of September and the 21st of September, there is a little bit of a rally on the market, and when it comes back up is usually when things start to turn to the downside. So right now, the rhythm of the market is This is probably this little peak we've had here in the past 3 days. That's probably about as high as it gets before it starts to make new lows again. And as it gets deeper, the market can continue to go higher. It's really once it makes a bottom and starts to break back up above and normalize, break above zero again and normalize, that's when we start seeing the market crashes. And so otherwise, I am, as you know, a subscriber to Hedgeye. And this is probably, I'll probably get in a lot of trouble for this if I don't know. We'll see. I'm just going to play a few moments here. And this is one of many moments that stands out. This is Keith McCulloch. He's the CEO of Hedgeye. And this week, he's done an investing summit where he's, you have to be a Hedgeye subscriber to get this, but he's interviewed Hugh Hendry, Mike Green, Mark Scholes, Lizanne Saunders, Daniel Lacalle, a lot of very prominent movers and shakers in the financial industry. And right now, this interview that I have up right now that you can see this image of is of his interview with Danielle DiMartino Booth. She's the CEO and Chief Strategist of Quill Intelligence. And I'm just going to play a few seconds here of this interview. I highly recommend that Hedgeye during this entire period here. I mean, I've been making money this whole way. All from the Qs have gone down 33%, but I'm still making money. You know, my portfolio is still up. It's not up like it was if it were a bull market, but I'm not negative. You know, I'm positive, and that's a lot to say. You know, for there aren't a lot of people out there in the investment community, in the financial world, portfolio managers and the like, who can say they've had a positive year this year, and fortunately I have. So here's just a few moments of this interview, and of many very profound things Danielle DiMartino Booth has said over the course of the past 2 years. It's really coming to fruition now. And she's been warning about Powell. She's been saying, hey, Powell is going to take this thing where he needs to take it in order to get inflation under control and the economy back on track. And this is just kind of a little period of the interview here where she's just basically saying, hey, this what you're seeing is what I've been telling you about for the past couple of years. She just says it again here. So we'll take a listen here for a moment.
Securitization has never been tested. Every single time you've had securitization tested, the Fed has come in and bailed it out. Right now, balance sheet's an issue, a big issue. Asset-backed securities are getting pulled at pricing. That's why commercial mortgage-backed security prices are ugly. And if you break securitization, you're going to take the triple Bs down. It's $3.5 trillion, don't worry. But you're going to take triple Bs down with you. You're also going to put the job of credit worthiness, of determining who's credit worthy, back in the hands of the banks by letting a market that has basically raped America go away. Now, it's a huge chunk of jobs on Wall Street. Everybody loves securitization. The more levered, the better. In it to win it. I get it. If he continues down this QT path that he is on, all the crazy people have gone really quiet on my Twitter feed because they're like, oh my God, did you see H4 after the close on Thursday? The balance sheet's actually shrinking. It's happening. And
it's happening, and we're just at the beginning of it. I think actually that's the next thing they say in this interview is that we're just at the beginning of it. The next thing they say in the interview is that we're just at the beginning of it. Hang on a second, I'll play a little bit more.
And just barely for the first time it's happening, right?
If you do the math, okay, Treasury inflation protected securities gain in value when inflation goes up.
Yep.
So the Fed's gargantuan TIPS holding, it's grown in value. So they're like, oh my God, they're in QE. And I'm like, no, it's an accretive investment. They're making.
Okay. Well, for a second there when McCulloch said, it's just barely happening for the first time.
If you, after the close on Thursday, the balance sheet's actually shrinking. It's happening.
And
And this is where he said this is where it's barely happening for the first time. So we're just at the start of this.
And just barely for the first time it's happening, right?
There we go. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.